Tesla, I'm not sure how far the market can go. But at the same hand, we do have at least marginal breakout in small caps. So you do have more and more companies participating in the rally, right? IWM, Bob's favorite, biotech, continues to kind of trying to make new highs. And you do have large positioning and rally in gold miners and silver, right? Which is basically a not bad, but investment, but very large VANA, negative VANA at 2. What does it mean? That someone is basically, or not someone, but a lot of people basically think that inflation is going to subside and interest rates will drop, right? That's what this means. So for that trade to come to fruition, you have to have basically continuation where rates already dropped, right? It's sitting on important support 420. If it breaks below that level, then these people will be right? Silver will rally, and the rest of the market will rally, right? But interest-sensitive sectors like small caps, biotech, ARC Innovation, small caps are trying to break through the overhead resistance, and silver and rally. All right, so I'm waiting for ExxonMobil. Let's add those stocks on the list, see if we can do any other shorts. So we have MPC. I have ExxonMobil, Wells Fargo. Let's see, Wells Fargo, 55.19. Let's see if I want to trim for Wells Fargo. So Wells Fargo was, again, I've been trading around this position. Okay, so ExxonMobil I got filled. So ExxonMobil, you can buy a stock or you can buy a spread, 100-105 spread for $3.40. So I'm risking $3.40 to make $1.60, right? Looking for about 40% return, maximum return, with the idea that crude oil will stay above 80, or at least range bound. And Wells Fargo was the trade from last week. I already trimmed half of the position at 55.61, and I'm looking to exit at 56.12. 56.12. Okay. So that's Wells Fargo. What else? Aggressive power trader. MasterCard, NVIDIA, right? MasterCard, NVIDIA. So maybe we can add those two and watch. Usually, if you're doing short-term trading or even medium-term trading, right, you want to kind of find some kind of a support and resistance, right? Looks like NVIDIA broke out, right? You can see a clear breakout. Wait for 15 minutes, and then you do have a support, right? It's a breakout. It's either going to close this gap, 820, then you might want to consider exiting. If you're doing short-term trading, if it's a long-term trading, I would look at Friday's session low, 800, right? We talked about that level. But that would be my stop level, right? I mean, NVIDIA moves 4 or 5% every other day. So you have to give yourself a little bit more room. It did pull back. But again, after earnings continues to rally, MasterCard, I think XP, similar pattern, and Visa, similar patterns. Okay. General Electric continues to go higher. Amazon continues to grind higher, make new highs. I think Verizon pulled back. Looks like NVO is breaking out. So you have a breakout above that 125 level, right? Next level, I think 130. Next level is pretty large VANA at 135. Pretty large VANA at 135. So it looks like next stop is 135 in NVO. EWJ pulled back. Let's see, small caps continue to break out, and energy utility underperforming, ARC Innovation underperforming, Dow Jones underperforming, QQQ flat, Spiders flat, and semis leading the market. Right, so it looks like NVO broke out. Maybe add to NVO, right? That's, you have aggressive power trader, you have profit accelerator. So if I get to that NVO. Okay. Let's add NVO. Okay. So NVO and XLK. All right, so, okay, so we do have NVO now in profit accelerator. Sorry about that, forgot to add. Okay, NVO, so it looks like a breakout. Next level of, in terms of position, is 135. So I'm gonna maybe add to the position. I already have NVO, but now that it broke out, maybe add a small position. And in terms of size, how much to add? Well, you do have, it's pretty far away from 50-day moving average. If you look at the weekly chart, I would say last week low, or at least the gap. I would go with last week low, so around 118. Let's see what the next level of positioning. 122. So it looks like there's some put buying around 122 level. 122. Okay, so it makes sense. So 122 looks like pretty well defended, right? And it's a volatile stock that can move quite a bit. So at 122, I want to be down less than $100 on a $10,000 portfolio. I don't want to risk more than 1% of my portfolio. So if it's down $5–7, I can buy maybe 10 shares, right? Maybe 15 shares. So that would be my thought process. Total, right? And including the previous shares that you bought. Okay. So and then you can always go into orders, right, and see. So I got filled on NVO. You can see the same information under Elite Circle. So that's NVO. All right, so I got filled on ExxonMobil. I'm long ExxonMobil. I'm long MPC. I'm long NVO. MPC, it's following the crude oil. I did trim the position last Friday, right? So let's go over MPC. You probably don't want to have be long MPC and ExxonMobil. ExxonMobil, I'm using option spread. MPC, I'm using stock. I would just pick one. Right? You don't want to be over. Right? The idea is, especially if you're new, you only want to have 4 positions. You probably don't want to have 2 out of 4 positions in energy names. Right? If you're like John and you're managing, millions of dollars, then you probably have more than 1 position in energy. But everybody's different, so something to think about. If you're new and you propose to have 4 positions, if you feel comfortable stock, okay, you trade MPC. If you feel comfortable trading options, then ExxonMobil, one or the other. But anyway, so in terms of MPC, I did buy on Friday. I closed Friday's position, and I also closed half of the position that I opened last week, right, on February 27th. So I have a half of the original position on MPC. And same thing with Wells Fargo, right? I opened position on Friday or Thursday. Friday. 55.20. I trimmed at 55.61, 1% gain. Usually I look for short-term trading, 0.5%, 1%, 1.5%. But if I'm holding position less than a week, I'm happy with these returns. And then the second half, then if it continues to go higher, I can maybe capture 2%. But lower, and I don't see major levels are broken on S&P, then maybe it makes sense to add. All right. Any questions? Bitcoin is breaking higher. SE up big on earnings. So China looks like recovering, up 10%. Nice. Thank you for sharing. For Bitcoin, strong momentum in Bitcoin. So the enthusiasm, right? You only live once, is still alive in Bitcoin. We've seen this in NVIDIA. NTAP earnings. We went over NTAP earnings, right? Notice how it's at 105 levels, like almost amazing. The open interest, right before the earnings, very large spike, open interest at 105. So it was, as high as 112, but now it's at 105. And actually, Dell is the same thing. So you can see it in earnings, right? All of these earnings stocks move, not all, but a lot of stock. Usually during earnings season, in the past few years, I would have one stock that moved beyond 2 standard deviation. Now, almost every day, there's at least one stock that moves beyond 2 standard deviation, right? So you can see strike 120 before the earnings, and almost like magic, it's stuck at 120 level, which is important information if you're doing butterfly. Bob, thank you for sharing. Calls through June. Okay, so very important. So there's a lot of ETFs now and individual stocks for the Bitcoin. So March 15, April 19. So there's a lot of calls, silent. You have, another maybe 6-7%, another 6 to 7% to the upside. Obviously, nobody's defending, nobody's buying puts, and people actually selling the 25 put. But it's not negative then on calls. So it looks like people are selling the calls and selling puts, basically saying that, it's going to trade in the range. So let's look at beta. Yeah, it kind of makes sense. 32 is next overhead resistance. You have to go back to December. Okay. Thank you, Bob. Yeah, Apple, it's not all green light, right? I would still exercise caution. You really, Bitcoin, Apple broke through this medium term 75, right? 175 or 62% retracement. So somewhere between 170 and we're already at 175. We're already out from the last August of 22. In terms of Apple, let's look at how well Apple they are. So March 15, April 19. See, that's the problem. Is this the right chart? Apple. Yeah, assuming this is the right chart, basically everybody's selling puts. Instead of buying puts, everybody's selling puts, basically saying that 170 put in March. Basically saying that Apple sold off to March and will not break through this level. Right, what was it? 170. 170. So it did broke 180. That's a problem, right? As it breaks down through the major support, it will pull the market probably close to 170, 168. So I would not be surprised if Apple is going to be 168, which is what, 7.45, another 4-5% drop. Thank you. Apple, Tesla. After reading Elon, so because I read the book, I'm not going to short it, but it doesn't look good, right? The gap broke to this level, now trading lower, down 4%, not good. And same thing with Google. So there does look like panic selling in the mega cap technology. So either technology is oversold and Google, Apple will rebound, right? Because that's what people think, right? People are not buying put. There's no put buying. I mean, I guess unless it's their own chart, right? It doesn't look like anybody's buying puts, right? Let's see in Google. Is it the same chart? Yeah, this is, well, at least here you do have put buy. Well, Google is trading at 133. So same thing. People are selling Google is 133 level. Okay, so at least there is some put buying at 133 level, 130 level, but it's matched with selling, right? Selling of April, right? So kind of a calendar spread. Which means that strategies, so that's prone for, you know, more drop, and then Tesla. So the idea is that these are all trillion-dollar companies. These are the leaders of the market. I'm not sure how much further the market can go on just sole enthusiasm of that, you know, that Tesla is a little bit better, right? So Tesla, at least there is large put buying, right? People kind of got burned on Tesla lately. So they are buying 180 put. So Tesla is well defended till, relatively well defended till 180. I mean, somebody is selling pretty large calls at 205. So not selling, buying calls 205. So somebody thinks it's going to go to 205. And then a lot of people think it's going to go to 205. So they're buying 205 calls that expired this Friday. And at the same time, they are buying puts at 180, which makes sense. That's probably what the chart says, right? So basically saying that we will, so there's half of the people think this gap is going to be closed and we're going to go trade above by, you know, a little bit concerned that 180 is going to be broken. So at least we're well positioned for 180, right? There's a lot of relatively large size of 180 put buying. All right. Any other questions? Again, gold's looking bullish from pre-market on open. Yeah, silver looks bullish, right? Gold looks bullish. Probably want to trim. Let's see. Silver is above 200-day moving average, but it's, I mean, it's been facing this overhead resistance since 2024 highs, right? So we're at 2024 high. Let's look at silver. Probably want to trim some of it because you do have pretty large positioning at so there is a large open interest at the 22 strike at silver. So there's two things that are going to happen. It's either going to come to 22 and rebound back, or it's going to break through 22 and continue going higher. That will depend basically, I think, on Powell's speech. You know, tomorrow, when's he talking? Wednesday Powell's speech or CPI data next week. So it may balance your positioning with the assumption that 22 will not be broken. Been lower than expected and interest rates pull back, silver, I think, could break out of this overhead resistance. So silver last 30 days. Okay, so 20. So I trimmed at 21.24, trading 21.48, so another 1% gain. Let's see. I was buying at 20.94, 20.99. I was buying at 21.5. So let me see, maybe I trim a little bit. When was the last time I trimmed it? March 1st, March 4th. Silver 22 and 23. So let me just maybe. because I mean it's a year-to-date high, right? So that could take a while to break. Same thing with gold. Gold is actually making new highs. Okay, so all the gold enthusiasts, new high, right? This is almost. I think this is all-time high. Yeah, so it looks like gold is at all-time high. It's a marginal breakout. I wouldn't get, one day doesn't set the trend, but at least you have a new marginal highs. So if you bought it 2011, then you're now making money after 14 years. Okay, so all eyes on gold, silver. Again, this is, I think, a binary outcome. What does it mean? That it just depends on the CPI data. If CPI brings down, then I think, at least as of right now, if interest rates drop, gold with the fear of inflation and it's very large print, I mean, interest rates could go higher, and I mean, gold might also go higher because gold is also hedged for inflation. But at least as of right now, it's highly correlated to the interest rates. So if interest rates drop, usually gold drops. If interest rates go up, gold goes down. But you could have a situation where, interest rates rally significantly, but you have to have, I think, very hard inflation data, which probably not going to happen. All right, so that's silver. Let's go back and let's review at other positions. China, looks like China's. All right. Okay, it's 9 o'clock. Questions. Housing stock on there. Let's look at housing stocks. Yeah, housing stocks continue to grind higher. Some going lower, right? China is going higher. Transportation is going higher. Value stocks again. The technology is flat for now. Semiconductors are up 1%. XLK is down. Dow Jones down 20 basis points. It's kind of mixed back. ARK is pulling back. Energy pulling back. Small caps grinding higher. Silver, gold grinding higher. Japan, Verizon, AT&T. In Amazon higher, Apple lower. It's kind of a mixed picture. Okay. Cool. Any other questions? Martin, any thoughts on P&W? I don't like stocks that have bad earnings, right? That means they're gonna, I mean, it's a great stock, but it gave negative guidance. And it's a sharp, more than 2 standard deviation. I think this is the biggest drop Alta ever had, right? So you can see that stocks are extremely sensitive to earnings. You either have 2 standard deviation to the upside or 2 standard deviation to the downside, right? Usually distribution of outcomes looks like this, right? Where this is, stock price, right? And this is probability of outcome. So in this earnings season, the 2 standard, then you have kind of, 1 sigma move, right? And then you have 2 sigma move. That's earnings. The 2 sigma move are significantly higher than usually. If usually it's, whatever the number is, 96% of the time it doesn't move beyond 2 standard deviation. Now it's only, 80% of the time it doesn't move, or 85%, or something along those lines. So that means that this is going to be the weakest stock, right? Any pullback in technology, right? Amazon staying strong, right? Nvidia staying strong, right? Because they had good earnings. But Apple, lower, and P&W is going to be lower. So I would stay away from stocks that said anything negatively during their earnings call. And you can just look at earnings and just see what the reaction is. I mean, I know that initially you want to buy because the price has dropped, but only if you have a long-term horizon, right? Beyond next couple quarters, right? If you want to hold it for a couple of years, 3, 4 quarters, 6, 8 quarters, I'm sure Palo Alto is a strong stock and it will continue to grind higher. but in the next few months, it might have issues. How could we trade NTAP? Well, NTAP, again, basically, I looked at the strike price and I looked at the option price, right? And I decided to do a call spread, right? I did basically both put spread and a call spread, so straddle. Notice that this season, the probability of 2 standard deviation is higher than it's been before. And the prices of options are sometimes cheap. So this is an example where, I put 100 call for actually 20 cents, right? So I invested 20 cents and sold it for $1.90. This is, implied volatility, right? So if implied volatility is, basically so showing that these options are cheap around, strike price with high open interest, and you think this is part of the AI and, any good news and it will rally. So then, then you go long. Same thing with, I think this week we have Marvel, right? Very popular stocks also participated in the, AI, enthusiasm. And you can see it 90, right? Big Vanna, same setup. People are hedging, so that's good. At least people are hedging 65 and 70, but there's a large volume at 90. Stock is trading at 78. There are people buying at 95. So a lot of people think that it will get to 95 level. 95 level is $17. So that's 25%, right? So it's not just like Vlad thinks, this is a relatively large Vanna, same setup as NTAP and Dell. So it basically shows you distribution of outcomes. That some people think it's going to go to 90. There's some people hedging 65, right? Not a lot of people are selling puts. So it's not you only live once. It's a little bit less enthusiastic. But at least, you can get to 65, which would be, what is it, $14 drop. So it's around 15, 18% drop of, AI, hype. Then you could do straddle, right? You can buy put spread, buy call spread, and as long as it moves 2 standard deviation, right, this is where you can, double your money or triple your money. But the stock has to move, right? The stock has to move. If it's just up 4%, down 4%, it's nothing's going to happen. How's Marvel doing? Moves up after the earnings and still has to do a lot of catch up. So you can see people are beating up the stock and they're excited about it. Okay, that's good. That is good. Right, MPC 7347 play. Let's see what the MPC looks like, March 19, and especially now that I have ExxonMobil. $180, right, 180. So pretty large position at 180, basically saying, it could get to 180, but it needs to break out. Stand above 180. Okay, fine, we'll hold it. All right, let's see other positions. Thank you, Charlie. Saying irrational exuberance. It could be irrational exuberance. It could be, some people argue it's rotation, right? People are trimming their, Magnificent Seven because they're just way, had a very strong rally, but they're buying biotech, they're buying ARC Innovation, they're buying basically beta, high beta stocks, whether it's Bitcoin or biotech or ARC Innovation or they're rotating in value stock. Either just a healthy rotation, or it's a beginning of a bigger pullback. And I think the only way anyone can answer that if they know what the CPI looks like, right? Most people believe that January, at least from what I've read, that January was an anomaly, it's just seasonality, it's always comes in higher, and then this CPI is going to get back to the trend. If that's the case, then you're just going to keep ripping higher, right? If that's not the case, and majority of the people are wrong, I think they'll get caught by surprise. You can see Apple, Google, people are not hedged, and then you can have started pulling back in Nvidia and Bitcoin. I mean, for now, obviously, there is no signs of Nvidia or Bitcoin slowing down. XBI taking a break. Thank you. Marvel thoughts, after NTAP and, Dell earnings, my thoughts are, I mean, I would not do it now, right? But my inclination is that I'm going to do similar to NTAP, right? The day before the earnings, which is next 3 days. In 3 days, unless market conditions going to change, right? I mean, Powell might say something there, right? He can say, guys, nobody's lowering interest rates anytime soon. We're data dependent. It's not happening the first half of the year. I mean, market could sell off, right? But let's assume he's not going to say that. Then it looks like same thing, buying put spread and buying call spread. Maybe not even put spread because it's well positioned, right? I think Marvel, what I see is that, let's see, March 15. Oh, no, I stand corrected. No. Right, so nobody's buying puts. They're not really selling puts, but nobody's buying puts, right? And mostly it's this large positioning around 90 and 95. Right, so if they missed on the guidance, the stock is going to fall apart, right? And if they don't miss on, right, why not Marvel? I mean, it could get to 95, right? So maybe buying call spread and buying put spread. As long as it's not too expensive, right? I would have to look at the implied volatility move, historical volatility. If I can put on a spread for, again, 30 basis points, 40 basis points, then that would be the goal, right? I would probably not sell call spread, right? When I looked at an NTAP, it was the same kind of spreads. I'm going to reverse and buy call spreads, right? Because, it's just a lot of exuberance at these strike prices. Kevin, thank you. Breaking up Spirit Airlines. I did look at Jets Airlines. I mean, it's going through consolidation, right? So for now, Jets as a sector, forget the individual stories. Jets as a sector just going through a healthy consolidation, strong uptrend. It looks fine. Marvel, thank you, Chad. It's like gambling. Trading is about probabilities and outcome of these probabilities, right? So as long as you're consistent and you're always doing the same strategy over and over again, and it gives you certain probabilities, then then the odds are on your side, right? If you're inconsistent, one day you trade, one you don't, one you trade bigger size, small, then it becomes difficult. But for now, earnings has been okay. Yeah, Fred, I probably would not sell calls unless, I'll have to look at the implied historical volatility, but if there's not enough premium, right, if I can't, has amazing chart. Yeah, Fast had a good, strong chart, continues to growing higher. Thank you. I think Waste Management was one of the weekly trader, also continues to growing higher. You can see under weekly power trade, if you're looking for strong, some other ideal kind of, but longer term. Same thing. So JP Morgan, General Electric, American Express, Nvidia, Travelers, XLK. All of these stocks have pretty strong chart patterns. Bob, thank you. The drop in the money over new plan. So do you see any play in either JetBlue or Safe? Early acquisitions and mergers, you're at the mercy of news, right, or litigation. So there's some people that kind of can follow this news and they can, but I usually don't. I mean, from chart perspective, it's a strong rally, right, on acquisition, then it's strong pullback, close gap, and now it rallies. So, I mean, from technical perspective, you can buy right now, right? It looks like it wants to go higher. So if I go long JetBlue, that's my stop level, right? Friday is low. If it drops below 627, if it drops 40 cents is what? 5%, 6%. So if it drops below 627 acquisition, I don't know, is this the end? Terminate merger dealer, today they terminate, tomorrow they might, put a new offer on it, right? But news aside, assume like I cannot predict the news, or, then that would be the setup. I mean, if it's true that if they rally on the possible merger, and now they're selling off that the merger is off, then, then you probably don't want to go long. Because that's the trade is over. Yeah, and same thing safe, right? It doesn't look good. Charles, thank you. Got it. On spiders or QQQ, thinking it may move on a way or other. They were wise to buy call and buy a put at the same strike price, the same expiration. Call and buy put. I mean, straddle is a popular strategy. So buying put and buying call, like what I did you could, I usually in 2 standard deviations, so I did a put spread, but it's kind of the same thing. It's just here, you're buying obviously not same strike price because it's a straddle, but some people just buy put and call. It's when you buy put and call at this on QQQ the same strike, you are basically saying that volatility is going to jump, right? VIX was at 18 in February, it dropped back to 13. We're in front of Powell's speech. We're in front of CP that expires, March 15 or April, April expiration or March monthly expiration, with the idea that VIX is going to get back to 18, right? But again, you have to have spike in volatility, which may or may not happen. Fred selling on Marvel Craig, how about that? Again, Fred, I would wait till the day before because stock could continue going higher, right? The problem selling call spread right now is that Marvel can continue going higher, so I would not personally do it. And again, I probably would not do it in front of until the day, and I would just have to, like right now, usually what I do, I look at implied volatility and historical volatility. And honestly, with Marvel, I don't want to, the problem is Marvel, see, it's already out of all the strikes, right? So in March expiration, the highest strike is 105. There's no strikes, well, actually, where's the green? Red, March 8th. So there is no strike beyond 95, right? And we already have a huge VANA. So it's a very dangerous setup, right? So if you go here, I mean, unless you have a strong opinion that they're not going to, hit a home run, but with all the chip stocks continue to go in higher, it's going to do. So unless you have a strong opinion that they're not going to hit a home run, the problem with Marvel right now, selling call spread, the last strike is 95. There's already huge VANA, right? There's a huge open interest at 90 and 95. So selling 92, 95 call now with that assumption that this large open interest is not going to disappear, right? I mean, if Powell speaks and we have a sell-off, then it's not a good strategy. But assuming we don't have a sell-off between now and Marvel earnings, then you can buy a call for 70 cents and wait. more likely than not, people going to beat up. You already have a breakout, right, on Friday, and most likely you're going to have some kind of continuation into the earnings. And then, you can either close the trade for profit, or at least, sell, maybe a 93 call. So at least this way, hopefully, But again, my inclination is it's the other way around. Yeah, you buy 92 call and sell 95, right? Here you're basically buying 30 cents and you're going with the crowd, that the crowd is actually right. If it wasn't a chip stock, any other industry, right? If it was, let's say, Target, I would not do this trade. But just meat, right? It's not like NTAP and NVIDIA earnings. I mean, NVIDIA was pretty good, but NTAP or Dell, if there was anything extraordinary about those earnings, there was nothing extraordinary to justify 2 standard deviation move. But because of they do move, so Marvel chart to me looks the position in Marvel is the same position we had in Dell and NTAP and in NVIDIA and in ARM holding. It's the same pattern over and over again. The high volatility. Double diagonal, you can do it, right? I do like diagonals, right? You can do diagonals. I would still wait for the earnings, like do the day before. Yeah, Fred, I think it's too risky, right? I mean, you could be right, but they have to miss on something. If they miss on something, then your strategy is right. But if they don't miss on the bottom line or top, which most likely they're not, right? Charles, okay, Fred, okay. 920, sorry. Why is it taking such a long time? It's because of these dealer position takes more time. Okay, let's just quickly go over the positions. So EWJ continues to grind higher, right? We have a breakout. I did trim the position. The strong uptrend, Japan continues to outperform. MPC, we talked about at length, so I'm going to leave a small position in case crude oil gets above 80 and stays above 80. I added to NVO. QQQ put spread, let's see. I mean, they're in trouble. I mean, I hate closing them. Well, April is okay, actually. March is already worthless. So March, there's nothing I can do, so it doesn't make sense to touch March contract. April, I mean, I'm down, but, less than 50%. And it makes sense that, there could be a negative surprise, either Powell speech or CPI. So I'm going to hold the QQQ position. Same thing with SH. I'm going to wait. Silver, I trimmed silver positions, so still long silver. TLT is in similar boat. I think it could rally, right? Verizon, I need rebound. It's been weak. Doesn't look like rebound is coming, but it's grinding on this 50-day moving average. Again, it's interest rate sensitive. I think if interest rates drop and inflation is going to come in better than expected, Verizon will rally as well. All right. That's all I have for today. Thank you very much. You've been a great audience. I appreciate your time and support. I will see you guys. Oh, Mark, welcome back. Cherry Blossom, Russell. Thank you for your support. You can find all the trades. There's a recording. As well today. For day trading, yes. Day trading, usually I do 1% gain, 1% stop loss, and then I break the trade into a half, right? So, for example, today, active trader. So for NVIDIA, right, here's 1% target gain, right? 1% stop loss, but I break the trade into 2, right? Because I don't know, is NVIDIA going to continue to rally or is it not? So I break the position into 2, right? But yes, 1% gain, 1% stop loss. in general, right? I mean, if NVIDIA, you probably want to make it a little bit wider. You know, for JP Morgan, maybe that's fine, right? So it depends on underlying data, but in general, that's the rule. For your thoughts, Charles, thank you. Margaret, thank you, Kevin. All right, gentlemen, ladies and gentlemen, thank you very much and have a great day.